This one was such an eye opener, and someone else created this. This is on Google, wherever it's at. And this is an S&P 500 index. This is out of a JP Morgan slide deck. But here from 97, whatever month it started at, through 2000, it grew 106% over like 3 years. It fell 49. But notice the negative 49 equaled the gain of 100. And then it grew over the next few years through, and I've got this thing in the middle saying slide 15. I wish that would go away. But up to the top of 2008, I think it is, here's 101%. Then it fell down. Oop, go back. Then it fell 57%. Again, back to where it was. And then this grew, and this only through 2015, it grew 184%. And of course, it kept growing and such. Where are we at now on the? I know the Dow is what, 35,
we're like 39.7. It's like 39.7 today.
Wow. Now,
well, this doesn't take into account, the correction that we had a couple of years ago either. But yeah, it has.
Right.
And there's been slight corrections here and there in between this. But yes, overall over the last 15, 20 years, or what have you, it has, generally speaking, continued to go on an upward trend. And that's kind of
upward is great for as long as it stays upward. And what we've been seeing lately, and I just did a thing yesterday regarding the inverted yield curve. And what is an inverted yield curve? And I'll just try to visually explain that. Is that a normal interest rate curve, especially in bonds? The longer you promise the money to be kept, the higher your interest rate is going to be. Right now, it's inverted. The shorter you promise it, the higher the interest rate is. The longer you have it, the lower it is. What is that trying to tell us? It says we want short-term money. We'll reward you for your short-term money. Long-term, we don't want it. And why is that? And the last time that really happened was right at 2007, 2008.
And that's
this an indication of things going to happen. And I'm not one to predict doom and gloom, but I'd rather help people reposition so that they could take advantage of bad news rather than being a victim of it. I don't want to see people be a victim of their financial planning. I want to see people be able to take legal, ethical advantage of things that happen in the marketplace.